said before that getting crypto right is essential for the U.S. What is getting it right when it comes to regulation?
It's so important because I think, as we've seen by the recent crypto crash, where we had failures of basic risk management, as well as poor and irresponsible business practices, that it's really imperative that we have the right guardrails in place for regulation. The rest of the world has been working on that. The FSB just recently put out some principles for crypto, and I think it's important that the United States and the CFTC follow suit.
You talk about the route, $2 trillion wiped out. We've seen the eradication of crypto hedge funds, crypto lenders, and the retail investors have also been banned. I mean, how is that all shaping U.S. crypto policies? How do you see that evolving?
So I think that really shows the urgency for regulators to act. I mean, under the president's executive order on crypto assets, and through some of the recommendations, it said that regulators should use the available tools that they have to issue new rules or guidance. This is something I've been saying all along. We simply can't fail to act any longer to put into place protections for the retail public, and again, to ensure that there's market integrity and to prevent fraud, manipulation, and abuse. So that's why I've done two things. First of all, I've put out my 10 fundamentals for responsible digital asset markets, which I think is a first of its kind proposal. That was earlier this summer. I also put in a proposal for an Office of the Retail Advocate. So the CFTC has a long track record of retail protection. But should we get additional authorities over crypto spot markets, then I think an Office of the Retail Advocate to really ensure that there's a voice for the public in this environment and with these risks is there.
Yes, we need regulation, but regulators can't agree. The SEC, the CFTC can't agree on how it should be regulated, whether crypto assets are securities or commodities. I mean, how do you get to regulation when you can't agree?
So I think that the U.S. regulators, and let's be honest, there's many of them, right? So other countries have a single peak or twin peaks model. I like to say in the United States we have a whole mountain range because we have several federal financial regulators, and that's not even counting all the state regulators. But there is, again, a long track record of the CFTC and the SEC working closely together over markets, over financial markets. And so that started with the Shad-Johnson Accord, which I think was in the early 80s or so. And it's continued through Dodd-Frank implementation with delineation of jurisdiction over swaps and security-based swaps. So I feel confident and hopeful that we will be able to work this out just as we've worked out many other tough jurisdictional questions in the past.
How is it likely to play out? Is there a sense perhaps like Bitcoin, Ether will be considered commodities and perhaps most other digital currencies will be seen as securities?
Look, this is a question that many people in Washington are working very hard on, but I tend to think that in the near term that you might see some of that clarity through the courts. There are a number of court cases that are working their way through the system right now that do touch upon this really important product definitional question.
What kind of oversight is the CFTC likely to have? I mean, there's a great push for it to have an oversight over these digital assets. How are conversations progressing?
I can't predict the future, but what I do know is that the CFTC's principles-based regulatory framework is better placed to anticipate and adapt to new changes and new risks in the market. And so that's why, with the CFTC's extensive, again, authorities over the spot markets from an anti-fraud and anti-manipulation perspective, everything from ags, softs, commodities like metals, oils, to energy, to interest rates, to benchmarks. I mean, you name it, the CFTC has got this very broad jurisdiction, and that's why I'm confident that no matter what happens, we'll be best placed for it.
You talked about the failure of risk management earlier. What are some of the key takeaways from the fallout from the crypto space that we've seen?
When I look at the crypto sector, what I think is happening is this accelerated and compressed version of the history of money. I mean, we've gone from public money to private money to a barter economy to commodification, financialization, globalization, opening up access to new markets and additional liquidity through electronification, and now digitalization. So I think we're just watching this history of money take place, and for each of those developments, there's been a regulatory response. So I think it's important that we use our existing tools, our existing regulatory framework, with additional guidance to provide clarity over the crypto sector and crypto activities.
Should there be a ban on retail investors in the crypto space, you think?
Oh, I think a ban is not, that's pretty anti-American. You know, I do believe in free markets, I believe in innovation, and I really think that we have to just make sure that there's the right protections in place. So from a customer protection perspective, I've said that we need to have education, suitability requirements, disclosure requirements, but these are all very familiar concepts. We just need to make sure that those apply to crypto in addition to existing laws against unfair, deceptive, and abusive practices.